Hello and welcome to Property Investment Finance. In this property we're going to be combining the introductory financial work that you've done in introductory financial courses with the property industry, the property investment world. For those of you who have done property valuation already, you will find that this will follow on pretty much from some aspects of the income approach to property valuation. For those of you who aren't in the property industry or have not got a background interest in property studies, it would be a good idea for you to spend a little bit of time in the near future perhaps gazing in the window of one of your local real estate agents and looking at the properties that are usually portrayed there. What you will find is there are two types of advertisements in those windows. One is for properties, usually residences, for sale. The other is for properties, again usually residences, for lease. These two types of advertisement reflect the two interests, the two ways that property is transacted, the two types of use of property. Property investment and finance is about really combining these two. It's looking at the buying and selling of property as an investment asset, and also the leasing, the contract to have tenants occupy your property for rental revenue in order to earn an ongoing income. There are a lot of parallels between investing in property and investing in other forms of security such as shares or even simply money in the bank or government bonds. In both cases you spend a fair bit of money at the beginning of the investment. You earn a regular income or revenue through the period that you own the investment, and at the end you sell it. In the case of property, we usually expect property to be sold for more than we purchase it for. And this is certainly the case in any community that is moving ahead in terms of its population and economy. And so we expect that a big part of our income from property investment will be coming from capital gain. What we're going to be looking at are advanced modelling techniques which are really drawn from our introductory financial studies to be able to work out exactly how well our property investment is functioning, how well it's performing as an investment, and how to compare it to other investments, maybe in different parts of the capital market. I hope you enjoy the course. By the time you get to the end of the course, you should be competent at doing advanced discounted cash flow analysis of property investments. You'll also have an understanding of the various strategies. We're going to go through the investment for development in property and look at their financing. We're also going to take your understanding of debt finance for leveraged investments a fair bit further. We're going to be looking at the peculiarities of the application of debt finance for real estate investment. What we're going to find is because property is such an excellent investment, it is very low risk and it tends to appreciate over time. It's the prime form or prime security against which money is lent. And so the whole lending industry, the banking industry, is very, very dependent on property. And this interaction, what we might even call a symbiosis between the banking and finance industry and the property industry, will be explored in some area. What we will also look at are the ethical issues to do with property investment and finance. And we're going to find that there are some interesting and very relevant twists and turns. And hopefully that will shed a little bit of light as we go along on inconveniences such as the global financial crisis, and hopefully give you the skills to be able to identify those aberrations happening into the future. I hope you find the course useful. It will certainly give you practical skills as well as a general understanding that even if you don't practice in the property area as a consultant or a valuer, you'll certainly find it useful in your personal lives as a way of understanding property investment, which is numerically the most common form of investment for Australians today.